It's a grand slam for data this week. We begin with inflation, then we'll be moving on to economic activity surveys, and we'll end with the US payrolls print. Good morning, welcome back to Morning Markets here at True Potential. It's a new week and it's been a bright dawn. This morning we've seen Chinese equity markets have had to be stopped trading because indices were up over 7%. That means equity markets there across the region are up near 20% in a week. It's remarkable and it's a great start for the rest of the week for the economic data ahead. Now, this morning we have German and Italian inflation data. If it comes in line, especially with the way French and Spanish data ended last week, then we're likely to see a downside surprise. And this is likely to bolster the case for a further and additional cut in interest rates from the ECB over the coming quarter. And this will bolster market consensus for a lowering in the deposit rate. So markets should take this well, even if the data comes in line. Definitely disinflation continues there. The majority of the middle of the week will be concerned with US survey data for both manufacturing and services. Now, the data from China is perhaps too late in the month to influence the manufacturing data, so we're likely to see a rather benign outlook from US industry there. But we may see some sentiment improvement in the US services data, largely thanks to the surprise 50 basis point interest rate cut from the US Federal Reserve only 10 days ago. This is likely to boost optimism there. Of course, given the surprise interest rate cut, we have policymakers in the US desperate now to backfill some credibility. Having not signalled there was a chance of a 50 basis point rate cut, they're now likely to try and give a case for why further rate cuts are required over the quarter ahead. So markets will take this dovish dialogue quite well, and it should bolster the case for higher global equity prices. And then, of course, we end the week, as we always do at the start of a new month, with the US payrolls data. Now, it won't be the first jobs survey this week. We actually get 4 more prints before that. However, the US non-farm payrolls is always the major blue chip print of the month. Now, markets expect a rather low benign print of around about 150,000 new US jobs created. And this would keep the unemployment rate steady at around about 4.2%. The reason for the market consensus to shift downwards over the last month or so is that the rolling 5-month average is around about 135,000. This is commensurate with non-inflationary growth in the US. So should we get an inline print, then we're likely to see equity markets supported further. So it's a great case for further interest rate cuts from the US Federal Reserve, and that's what a number of these members in the speeches this week are likely to signal, that the case for additional rate cuts is bolstered by underlying inflation moving back towards target and a more benign outlook for employment. So it's a constructive time to start the week. So that's all for today, but please do join us tomorrow where we'll update you on further activity from China and also the European inflation data. That's all, thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.